I'm curious what your thoughts are long-term for Bitcoin, blockchain, and then I know you've highlighted one of the stable coins out there called Tether, which you think is potentially a danger. I am still a big believer that blockchain will be a big part of our future. I think that cryptocurrencies have a definite place in the future, especially from the time I spent in banking. But obviously, we saw a real centralization issue come to head the last 6 months. What's your take on what happened in the future?
Well, I don't own any cryptos. I don't recommend them. I'm not a crypto basher. I'm like, hey, if you like them, knock yourself out, go get some. But the pushback you get, and you know what it's like, Brian. People go, oh, you're a dinosaur, you're a Neanderthal, you don't understand technology. I was writing code in 1969. My partner was future chairman of CEO of IBM. I do know about it. I was in crypto versus gold debates in 2010. And I read Satoshi Nakamoto's paper when it came out. I was doing this from 2010, and I followed it all the way through. So do I own it? Do I recommend it? No. But do I understand it? Yes, I get it. Blockchain's been around since the 1980s. It's not new technology. It has applications that have nothing to do with cryptocurrencies. And yeah, blockchain, it's a ledger. It's a particular kind of ledger. It has some outright benefits, and it will be with us. And that's good. It can simplify and lower costs in a lot of different processes. As far as cryptocurrencies themselves are concerned, I studied it for 10 years or longer, 13 years at this point, but it took me a really long time to understand it. Technology, the math, the mining, hash rate, I got all that stuff. But I'm like, what's there? What's behind this? And I always go back to Gerstein. There's no there there. And what fascinated me, particularly over the last 3 or 4 years, is that the crypto universe, crypto groupies, they replicated the ecosystem of Wall Street. So you start out with the coins. Bitcoin's a coin. You mine it, etc. But that's all it is. Has uses, some good, some bad. But then they said, well, how about a depository? How about a custodian? How about an exchange? How about technical charts, candlesticks, trend lines, resistance, on and on and on, so that you completely replicated the entire structure of Wall Street: exchanges, banks, custodians, technicians, analysts, etc. Trading, hedging, derivatives, options, future. It was all there with one big difference, which is, just take Tesla for an example. You may like Tesla, you may not, but they actually make cars. You can drive one. It doesn't have to be tangible. It can be a service, an insurance company. They do something. There was nothing at the center of this. There was the token itself, but the token itself, I always make the point of saying that every graphical representation of Bitcoin I've ever seen is a gold coin. It's just a gold coin. What's up with that? You're sort of saying something about gold, if you ask me. Why is it a coin? It's not a coin. It's a couple electrons, and it's certainly not gold, but they love to show it as a gold coin, as if somehow you're getting a gold coin and you're not. But so what's there? And I did come up with two, I'll say theories, but I think they fit really well. The first is, let's say, casino chips. So I walk into a casino, put $1,000 down on the roulette table. I like that game. The croupier hands me the chips. I bet I can win money or lose money, but that's on me. But at the end of the day, I take the chips to the cashier and get my cash back and walk outside. I can't take the chips outside. I can't buy dinner at a restaurant across the street with casino chips. In other words, the Bitcoin has some utility and value, and you can make money or lose money. Believe me, I know people have made tens of billions of dollars, and I've spoken to Michael Saylor. He was up 6 billion. Now I think he's down to 6 billion. But so that's real, but it's not different than gambling. And maybe the odds are different, but it's basically a casino chip. You can gamble in the casino, you can make money or lose money, but you got to cash it in, which is basically going to a portal and getting your dollars back, which everyone tried to do with FTX, and they found that the dollars weren't there. And we'll see what happens with Tether, but it's nothing more than that. The other theory, this took a long time, and this goes back to work I did in the 1960s, is using communications theory. And here we're way into Walter Ong, Marshall McLuhan, pretty good friends with Timothy Leary, and Havelock, who did a study of Plato that explained why Plato hated Homer. Scholars are like, why did Plato hate Homer? He's a good poet. Well, Homer wasn't a poet. He was an encyclopedist who actually did everything orally. And it was the shift from the oral to the written, to phonetic language that was the demarcation of Plato. Plato said, we got to get rid of this oral stuff and start writing and reading. But now we're 2,500 years later, we're coming out the other end of the tunnel. No one reads anymore. We're back to what we're doing: audio, video, digital representation of various forms. What's an emoji? An emoji is a hieroglyphic, which is a non-phonetic language. So we're actually getting back to a Homeric aural, AURAL, tactile world. And Bitcoin fits right in because it's digital, it's electronic. This kind of McLuhan traces back to the telegraph. So the point being, it's best understood as an hallucinogen. Everyone sees what they want to see, and it's very tribal. And McLuhan said, when I say tribal, don't think of a bunch of people sitting around the fireplace saying kumbaya. Tribal, it's not civilization. Tribal society is very violent. So I view cryptocurrencies as part of an electronic, digital, oral, tactile society that's abandoning the phonetic alphabet, getting back to drums or Homer, but a very different kind of society that is very good at myth making and can be violent.